Today we're going to take a look at a real life example of an earthquake insurance deductible in action. How it would apply in certain situations. Let's assume for this particular person, they got a $1 million home. The dwelling coverage amount is $1 million, and they have a patio, a pool. So they got other structures for $100,000. To make our math easy, we're going to say also personal property at $100,000 and loss of use at $100,000. Further making our math easy, let's assume that deductible is just 10% that they elected. Keep in mind that deductibles for earthquake insurance range from 2.5% all the way to 25%. Okay, and these numbers would change if they elected a different percentage for their deductible. Now let's assume that this person had a total collapse after a major earthquake. Okay, so they would have to meet the $100,000 deductible, and then for their $1 million of coverage, the insurance company will cut them a check for $900,000. Okay, same thing if they had a damage to their pool, the pool cracks, the patio cracks, they would have to meet only $10,000 on that, and their patio and the pool would be repaired. Now let's assume there's an earthquake and there's no damage to the dwelling. Also, there's no damage to other structures, and they have $20,000 of breakables damage. So everything fell out of the cabinets and they have $20,000 of breakables damage. So they have a $10,000 deductible for personal property. The insurance company will cut them a check for also $10,000. Okay, so this is how earthquake insurance will work in your favor. You may not have damage to the dwelling, but you will have that personal property coverage, which will make up for all the years of premium you'll be paying for your earthquake insurance. So it is a very important coverage. It could put you back ahead in an earthquake that even is not a major earthquake. Okay, so if you'd like to learn more about earthquake insurance, give us a call or go to our website on earthquakeagent.com and fill out a quote form today.